The government will retain at least 51% control of these SOEs on behalf of all New Zealanders. The same model that's been very successfully used for 10 years within New Zealand, and Kiwi investors will be at the front of the queue for shares. The other example of a mixed ownership model involves local government. In fact, in my own region, where the Port of Tauranga is 55% owned by local government, it's close to being one of the best performing stocks on the New Zealand share market, and it represents the sort of mixed ownership model that can benefit New Zealand. Of course, its stock market performance is very closely related to the quality of the local members of Parliament. The government also manages $220 billion of assets owned by taxpayers, everything from hospitals to schools, state houses, roads, to the superannuation fund, electricity companies, and shares in Air New Zealand. And these assets are growing rapidly. Over the next 5 years, we will increase taxpayers' assets by about $35 billion. That's a 16% increase in the amount of assets that the public has. This figure is net of depreciation. In gross terms, the government will acquire around $78 billion of extra assets in the next 5 years. So any suggestion that the government is selling the family silver is rubbish. We're actually buying and growing more of it. And this is a very large commitment to public investment. It's more than the entire value of the New Zealand Stock Exchange, and about as much as all of the managed funds owned by New Zealanders. The $78 billion of new assets will be funded from a range of sources. Some, like roads, come from the dedicated taxes, and some come from returns on commercial investment. But over a quarter of this, some $21 billion, will be funded from the Crown through extra borrowing. We think both the government and the New Zealand private sector will be better off by having local investment in these assets. The mixed ownership model will improve the balance sheets of both taxpayers and the investing public, and bring better commercial discipline to these companies and provide them with easier access to capital to grow. In fact, the $5 to $7 billion mixed ownership model program is actually pretty modest. And as I said, it's about 3% of all the current assets owned by taxpayers, and it's about 1/6 of all the new net assets the government will accumulate over the next 5 years. So we've promised New Zealanders will be at the front of the queue for shares, and we would rather pay dividends to New Zealanders than interest on rising debt to foreigners. And now overseas investors will play a role in helping to get a good price for taxpayers. They will also help deliver a robust and liquid market for New Zealanders. But it's important to remember that these companies will remain firmly and overwhelmingly in New Zealand control. In total, we expect across the program, New Zealanders will own at least 85 to 90% of these companies, including the government's shareholding cornerstone. There are solid reasons for expecting strong domestic support for shares in the mixed ownership model companies. For example, New Zealand retail investors currently have $105 billion sitting on the sidelines in term deposits, $108 billion in financial assets, and between $100 and $150 billion in investment property. This adds up to total investments of over $300 billion, excluding their own homes. The 34 registered KiwiSaver providers have about $9 billion invested, and they'll double in size over the next 4 years. New Zealand institutions, excluding the KiwiSaver funds, have $59 billion under management, and the government Crown financial institutions, including the Super Fund, ACC and the GSF, have almost $40 billion under management. And iwi are estimated to have over $10 billion of assets. So the mixed ownership model is very small compared to the size of the capital pool here in New Zealand. New Zealanders are also telling the government very clearly that they are hungry for other investment options, particularly with the shine having come off investment property and finance companies. This has been apparent in the very strong demand for corporate bonds. More than $11 billion of non-government debt has been issued over the past 2 years alone. and many of your members will have participated. What's more, lower wholesale interest rates and a reduced demand for highly geared property reinforces this appetite. And I think there's a very clear understanding amongst the public about the opportunities these partial floats hold for New Zealanders. I can recall a public meeting in my own electorate at Mount Maunganui soon after last year's budget and the changes made to residential property tax deductibility. And one of my older constituents got up and said, well, we've got the very clear message from the budget that you don't want us investing in a second residential property. And we've learnt the lesson ourselves that we don't go investing in companies like Blue Chip. And he asked, well, what does the government want New Zealanders investing in? And some of our best quality opportunities to invest in New Zealand businesses rests with some of the companies that we're proposing to have a partial float with in the mixed ownership model. Final arrangements for the government's mixed ownership program will be made next year after we've taken the policy to the election in November and after the scoping studies have been completed. But there are some aspects that I can confirm today. As I've mentioned, the government's already made two very important commitments: that it will retain a shareholding of at least 51% in each company, and that New Zealanders will be at the front of the queue. It's our clear intention to prioritise New Zealand investors so they will have first opportunity to buy the shares. And we will invite participation from New Zealand investors. They will include retail investors, Kiwi Saver funds, other managed funds, the Crown financial institutions such as ACC and the Super Fund, iwi, community trusts and all others. And we expect most of these people will be long-term shareholders. In addition, we'll ensure the widest possible spread of shareholders, and to achieve that, it's the government's intention to impose a maximum shareholding cap on the mixed ownership model companies. That cap is most likely to be 10%. For the reasons we've outlined above, the government expects a strong and ongoing demand for shares from New Zealand investors.